Top three things in my notebook this morning. Number one, the euro. Number two, France. And number three, the 10-year bond yield here in the U.S. And I'm going to hit on 10-year bond yields across Europe as well. So first on the euro, Draghi trumps Yellen. That's pretty obvious at this point. He will do evidently whatever it takes, which may be taking Europe into the Japanese posture, which, by the way, didn't end well. So just FYI on that. But people tend to like these kind of central planning cowbell events. And they do have the futures up across the board with Europe trying to bounce equities back up to the trend lines. Now, all European equities, all the majors with the exception of the FTSE, are below their trend line. But the euro itself is just getting smoked down to 1.31 versus the dollar. Definitely something I had wrong in the face of Draghi just coming out more dovish. I just didn't make that call, and you already know that. Looking at France, the second thing that happened on the way to the forum this morning was that the French prime minister resigned on a weak economy. So you got to buy him on that, right? I mean, right. Okay, let's just buy him. Buy him until you don't buy him. Again, at the end of the day, European growth slowing at an accelerating rate. Don't forget, when they burn the currency, that will not be good. They're going to get incremental inflation. Again, on the margin, will slow European consumption growth. And again, if you look at the CAC, 10-year bond yield or the CAC in France, it's just annihilating, to look at the 10-year bond yield here in France at 1.3%. 1.3%. That's signaling a very slow growth environment, and the CAC would have to close above 43.64. The CAC 40, again, the CAC 40 in France, that's its trend line, and it is obviously still below that. Finally, on the 10-year bond yield here in the U.S., if you ask the bond market, it just doesn't care. I mean, at the end of the day, that's the only thing I have right this morning, which is staying long the long bond. 2.39% again and falling. No support to 2.34%. So again, simple reminder that as the U.S. and Europe slows at the same time, Janet Yellen is going to continue to find ways to get more dovish, which would include into the September meeting once we get more August data, which you're going to obviously get this week. And those are your top three things.